Yo, what's up guys? It's Pygoz here, the CryptoPy, and today in Crypto Trading Basics, I'm going to tell you guys how I personally enter my trades, right? So there's different entry techniques. I've already went over one in a different video about the 7, right? I call it the 7 because you scale in, right? You buy 1/7, then 2/7, and then you buy, the last one. So then you have the 1 plus 2 is 3 plus the 4/7 is complete 7 of the 7, right? And that is a very safe way. So guys, I'm once again going over that one as well. So we're just looking at ontology here for the examples, okay? So the way it works, guys, is if you would do the 7 way, you buy 1/7 here. Wait, can I yeah, so 1/7 over here. Let's make this small. Don't need to have it this big. Okay, so you buy 1/7 over here, guys, at your 0.5 line. Oh, okay. Then you buy then you buy double of that, so you buy 2/7 over here, right, at the 618. And then you buy potentially it could go even lower to 786, right? I'm not a big fan of that, but it could. You buy once again 4/7 over here. So, and then obviously that's all your money, right? You're all in on this trade. Now if it gets obviously makes a newer lower low, then you need to get out. But if it doesn't, you're most likely gonna make a profit. Okay, so that is how this one works, right? And then you get an average, right? And your average becomes pretty good because you keep buying double the amount of the previous one. So that is one entry technique, guys. But obviously I have more entry techniques than just that, right? That would be silly if I just had only that. So because I personally, I don't use that too often, right? It's definitely good for newer traders. It's very good for newer traders. But if you know your risk and you will keep to your stop loss or stop limit, then you can use other techniques as well. So for example, what I've used on this ontology trade is we're going over this right now, right? So we're going back, guys, on replay mode here. So yesterday we started falling, right? So we fell, and so I wanted to buy around the 0.5 to 618, but so that is what I wanted to do, right? So then what I'm looking at is at big wicks for me to tell me, yeah, this is kind of like a bottom. We also have the cloud here. So when I saw this big wick, I was like, pretty cool. And then another wick like that. And I was like, So I bought at the cloud, okay? So I just put my order here because of the wicks. I didn't even know if I would get picked up, but I put my order here, right? And I got picked up. It went a little lower, and and then my initial risk level was something like this, okay? So I wanted to buy on the cloud. So here you have the cloud. So I wanted to buy right around there. And then, I just look at, for example, this, obviously you have resistance here sitting here, right? Because I didn't see it just going all the way up. I mean, if it does, that's cool. But if it doesn't, I just see that you have resistance here, right? So I just put very conservatively, guys, put my risk reward up there. And then I'm like, okay, so if it actually closes below this 0.65, then I want to get out, okay? Because that's bad. So now you might say, is that bad? Because in your other technique you would still buy here as well. Well, that is because it often also bounces from the 786, but you don't know how far it will bounce. So if you go all in, as in this technique, all in as in what you want to put into the trade, you put it all at one spot, then you need to have your stop just set. It's as simple as that. Because if you don't, and you just let it go down, then you cannot add more anymore, right? Because you didn't allocate any more to that specific trade. So from here, guys, so basically I bought here, right? You got one little lower, but it never, so see, it never went under this 0.65 because this is an algo target, guys, and I heavily believe in that. If you go lower and actually close below it, then I would get out. So I didn't put my stop loss as in on the website because it could wick down real quick. I wanted to see a close below, so I stayed up for a little bit, right? And then when it took off, obviously I just went to sleep and it's fine. So and then you wake up a couple hours later, right? And basically we got to my target, and you know, I just sold. You know, maybe it went a little higher after that. I don't know. Yeah, so you see it went even a little higher, but that is just where we're at right now, and I already sold, guys. So that is another technique that you could use, right? Is going all in of what your capital, well, all in, you know, it's kind of like between quotes. Never go all in with your whole entire portfolio, but with your trading portfolio, you go all in at one point, and then you have a stop that is based on, you know, a point of interest. So in this case, you had the 0.65 line, and you would be below the Ichimoku cloud of the 1 hour, which is both bearish signs. So then you obviously want to get out, right? That's not what you want the trade to do. If you see something that the trade is not supposed to do, guys, that you don't want the trade to do, it's okay to take a loss. All right, that is just something that I cannot stress enough. It's okay to take a loss, because you would only take a loss of 1.47% in order to gain 4.34%. So if you just keep to about that 3 risk reward, it's nearly 3, then you will do okay, guys. You know, I can tell you that, unless you're such a bad trader that you only get bad calls. But in this case, you know, I did just fine. So yeah, that is just something, guys, that you know, because people talk about their entry levels, and they only talk about the 7/7 now, because, you know, I've used that before, right? I told you guys about that before that, but this is just another one that you could use. So, right, so based on wicks, guys, right, I just saw this massive wick, so that is a massive rejection. Then you see another massive rejection. So then I was like, okay, so we have a lot of support here at the Ichimoku cloud, right? Even though I already saw the cloud way before that. You see it, you know, when we're up here, you already see the Ichimoku cloud. But and you already see the Fibonacci, but you still want to see some kind of confirmation that it's actually, you know, that it's actually a support. And you can see it is actually a support. You also see previous price action here. So yeah, this was actually a support, so I entered the trade. That is just, you know, how you do it. So you wait for some confirmation where you see rejections, and then you just go in. Now the same thing could be applied to shorting, guys. All right, so if we go to Bitcoin, yeah, this so on Bitcoin, guys, so you could have shorted this. Why? Well, this is another entry technique, guys. So purely based on RSI divergence. All right, so you got this lower high here, then a higher high, right? And you got what we call our bearish RSI divergence. RSI is going down, well, the price is going up. So that is something that is not supposed to happen. And so when you saw this, if you were there, and let's say you see it close here, what you could do is you can open a short position. And in order to do that, well, you go to short position here, right? And then you saw it close here, so your risk would obviously be above this, because this was your high. And I know it's quite crazy, but then you can target around like, well, based on Fibonacci, right? I would always do based on Fibonacci. So the 0.5, well, 0.382. Honestly, I would target around based on these highs, right? I would have targeted honestly around here. No, not exactly all the way down there. I mean, it's just a little bit madness, but it did go down there, and it's still a fib, right? It's 0.5 level. So yeah, but yeah, basically that's how you can also enter, guys. So based on RSI divergence, right? Bearish RSI divergence. Same thing could be said here to go when it went up here, right? You had some bullish RSI divergence. So see, even though it's only slight, it's still something, right? That is another technique that you can enter your trades on, guys, is RSI divergence, right? And it's even better if you enter your trades based on multiple factors. So multiple indicators, multiple, let's say, big wicks to the upside are obviously bearish, right? Well, I mean, this is a bearish wick, guys. This is a bearish wick that we have right here on Bitcoin right now. You know, on the hourly, it went all the way up and then it got rejected. So, but do I expect this to go down immediately? No. I expect us to make some kind of Bart Simpson pattern, right? So some kind of Bart Simpson pattern, and then depending if we get another wick like this, then I have real confirmation and I want to go short. That's for sure. Then I want to go short, and I probably want to go short very conservatively. Let's say it would be up here, right? If we still are somewhere up here, then I need to put at least my risk higher than this, and if we get even one higher, even higher than that. So, and then my my target will be around here, right? Just because of the price action there and the 382, so probably 382, which is a 1.26 risk reward. It's not that great, but it could potentially, guys, if well, you know, that's lucky if you're short. It could potentially fall, right? If it falls, you just watch the market when it falls, guys. So, and then if you don't see any big rejection candles, then you know that it will most likely just keep falling. So it depends, right, what happens, guys, right? It totally depends what happens. So yeah, that's just something I wanted to talk to you guys about, right? That's for this crypto trading basics video, guys. It's entry techniques, all right? So what we talked about is entering based on rejection of wicks, right? So either to the downside or the upside. We've talked about entering based on well, it's always on Fibonacci as well, but purely on Fibonacci, and then based on the 7 series, right? So 1 7, then 2 7, and then the last one is the 4 7s, right? In order to get the 1 plus 2 is 3 plus 4 is 7 of the 7. Then we've also talked about entering based on RSI divergence, right? So basically bearish RSI divergence or bullish RSI divergence, right? So that's just 3 entry techniques that I use myself. And then last but not least, guys, I'm going to talk about one more that's entering based on my 21 EMA, so 21 exponential moving average. When it closes above, and it closes above twice in the green, so this doesn't always work, guys. So this is pretty, you know, like when it did here, then we fell. Okay, that's a little loss. Then you entered here again, so 1 2 2 candles, then you enter. Okay, so 1 green candle, 2 green candle above the white line, right, above the 21 EMA, you enter. If there's 1 and then in red, you don't enter. So then you enter, right? That is just one another technique that I have. But that works the best on trending markets. So right now it's not that much trending. These things, what we see here, guys, these candles with big wicks is what we call pin bars, right? They are your biggest sign of reversal in trading, right? So these are the biggest sign in reversals in trading, especially if you see them on a big time frame, right? Let's see if we can see any on so even on the 4 hour, you got warned here, big warning, big warning, right? You had this big pin bar upside down, so with the wick to the upside, that tells you, like, guys, we're going to go down most likely, right? And that's what happened here. So guys, that's just some entry techniques, all right? So also, guys, if you're not in my Telegram yet, join up with the CryptoPy's blog, where you can ask me any question, you can ask other people questions, and it's just a great chat box to be in, right? So join up with that. Bitsy and Apex having some Yeah, yeah, some promotion. That's cool. Half of Monday's pump. Yeah, I saw that as well. It's not that great, but hey, it made me some profit, Toby, so I'm good, right? I didn't go for big targets because big targets right now, it just didn't feel right, all right, after a dump like that. But you know, I'm a pretty conservative trader in this bear market. You know, when we go bullish, obviously I'll be a lot more bullish on my targets as well. But right now, you know, I just need to take it day by day. So yeah. Also, guys, join up with the CryptoPies feed, where I post all my videos, post about upcoming ICOs. When I find one, I will tell you guys about it to get whitelisted. Then you can always decide to go in later, whether you want or not, right? So yeah, look forward to that as well. I'm definitely always looking at ICOs, but guys, I'm sorry, you know, if you're from the US or China, I do get PMs asking like how you can participate. Well, there is a way you guys can still participate in these ICOs, and that's by joining these ICO groups, right? There are like pools, but do keep in mind that's a little bit more risky. So yeah, there is a way, but it is more risky. So yeah, that is pretty much it, guys. Both telegrams will be in the description below, and if you enjoyed this video, please like and subscribe, hit that post notification button, and if you got any questions at all, leave a comment below, and I'll see you guys in the next video.